Hello traders, how are you? Happy weekend. Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex review for the week starting on 25th until the 30th of March 2018. This is the last official week for March. Who would believe that? Scary to think about it, but a quarter is almost gone, right? Quarter of 2018. So first of all, thank you very much for finding the time to watch my video. As always, I hope to be helpful to you and useful to you and your preparation for the trading week. If you enjoyed the video, it would be really great if you can support me and my team back by clicking the like button and leave your feedback below the video. Your feedback, our motivation, it's not a secret. This weekly review will have a PDF version which will be published on Monday, and just come back to the video, go to the comments, there will be a comment from myself with the link to the PDF version, or just check in the description and I will also publish that in the description as well. So that will be ready by Monday. That's all. Once again, thank you for your time, and now let's begin and see what this week brings for us. So first of all, what did we see from Mr. Market on the last week? The sensitive relations between Trump and other countries in all the terms of exports, imports, and the taxes plan. We continue to see the Fed hiking the rates, and on the same time the market kind of got disappointed. It's weird to think about it, right? Like the Fed hiked the rates, you would think easily that we can see the dollar getting very, very strong, and it will. It just takes time for that. But the fact that the new Federal Reserve Chairman was kind of dovish or not hawkish enough as the future traders were expecting, this fact contributed the weakness of the dollar, and that might be around for this, or well, you know, at least the short term, but later or sooner, and this is something that takes time to build. The dollar is going to gain the strength, and it's going to gain it very, very hard and big time. Again, it's not such things don't have the immediate change or impact. It takes time for the traders and the investors to figure that out and to see how they translate it into the trading decisions, and that's all. So the first pair on the list is the euro dollar, a pair that we have been following for a while, and basically still moving inside the range. The only thing that what is currently still suspicious for the euro dollar is the fact that it's holding the bottom of the range. We would want to see that going and gaining the momentum below the range, and it refuses to do so. And by the break of this trend line, if it manages to hold, the euro could hint easily another rally towards 125, 126, or maybe even higher. So that this possibility definitely remains on the table. On the same time, we can see that the euro still is holding the highs going lower. Each high is lower than the previous high. No, the lows are not lower, right? So that makes it kind of triangle. And the possibility for a change here inside this ranging zone are still on. If this scenario holds and the euro dollar breaks this last couple of flows to the downside, the bearish momentum might go and begin. In that case, we will be aiming the 120, 121 zone at least. Okay? What concerns here a bit is the fact that there are too many big positions, big enough positions with a sell already, and that started much earlier actually. That's what's concerning here. And we know that when the money starts to be involved in some position before the right time, normally The professional money is clearing some next of the levels. Same happening with the euro, so I would not be surprised to see that taking a hike. But note, even another hike here, if happens, would be, from my point of view, yeah, to create another false break and then to begin its move down. The fact that the current cycle is stuck in, oh, sorry, click the wrong button, it's stuck inside the range, just make it to be, take a look here in terms of the cycles, right? We have this cycle and now a range. Range is a corrective cycle by itself. We are now in a correction. Correction could be in two waves or a range, and currently it is a range before possible continuation. So that's why the euro is suspicious and not really one way going to the downside as we and so many other would really want to see. And as I always say, don't fight the market, accept the market, right? Don't try to prove that you are right. The market can bite. So we have to remember that, and don't try to think that we are smarter anyway than the market and try to prove ourselves correct. If the market refuses to do whatever you prefer and expect, simply listen to that, get it as a hint, don't force. You can tighten the position or wait for clearer setups. Very simple. Aussie dollar has a very interesting setup here. From one side, the bottom of the, oh, sorry, from one side, the bottom of the a raising channel, and also from other side, the bottom of the dropping channel here, right? So we are coming to critical zone. As you can see, this is the zone of, well, I would say 0.76, surrounding a bit higher, a bit lower, everything is possible, acceptable here. The next zone, if the first one would be broken, is 0.74. I'm currently doubtful we are going here, at least at this stage. So the way I see that is basically that this is going to be the low. We should find the Aussie dollar struggling here, maybe bouncing from this trend on the bottoms, and we should be looking for bullish reversals and evidences. So once we get the bullish evidence, like a false break, like higher highs on the lower time frame, let me try to draw and explain you what I mean. Let's say we got a move down, lower lows, higher highs, retrace, and another rally. This is a great sign for a possible continuation to the upside. Okay, that's the idea. Now I want to pay attention for something interesting happens with the Aussie dollar. Check what happened on the past drops here and here, right? All the drops were also in channels. Now see what happened. One low, then rally, and then two false breaks. 1, 2, right? 1, 2. Same here. One low and then 1, 2. And same might happen here. One low, then 1, and possibly 2. And each of them, look what got with it after that. So that's for sure not a guarantee or anything like that for the future, but this is definitely something to pay attention to, because if this move happens this way, it's a great one to trade. Aussie Kiwi is another one I love because it's approaching to some magnet zone here. I love the levels and the fact that this is sitting here on a critical supportive area as well, the zone of 106, 105. I believe that this divergence that is developing should play an important role, and we should see the Aussie Kiwi switching upwards from the area. The best way to do would be to mark the last trend line, get the breakout above that, and with the pullbacks look for the buys. For those of you who are okay with aggressive entries, then we had one false break here. If we have a second false break here, let's say a candle closes above, that would be a good sign on the short-term terms to look for the pullbacks and bullish setups with the strategies that you use. The next one on the list is going to be the euro versus the pound, one of my favorites. Now, you know, well, those of you who follow me for a while know how bearish I am on this pair. There is a very simple triple cycle to the upside, falls back on the weekly, bearish divergence. And now, when we do the Fibonacci retraces from the bottom to the top, we got these numbers right here, right? And if we do the extension of the cycle, we get, you see, we get critical zones here for magnet zone. Magnet zone, that's two different measurements of cycles. It could be retraces, it could be also extension. When they meet the same level or the same zone, that's creating a magnet zone to different cycles involved or more cycles involved, and creating a very, very powerful zone where we can expect action from. So the first area is right here, and we can see the bounce during the last day of the week. But the real area is 084, 084.50, and the next one is this. You see the 50% here? This is the gap area from the Brexit, believe it or not. So I am still bearish on the euro pound, of course, and now on the daily chart we got a bounce here on the bottom of this channel, so we can expect a little pullback. This would be a classical area or slightly higher to start looking for bearish evidences and sell continuation, and that's the next great levels to look for targets. The next pair on the list is going to be the dollar versus the yen, and this one is very interesting. We got here kind of a special cycle, after we get kind of a double cycle, so that's why I expect a continuation. We get one move down, and second is developing. The bullish divergence is developing, not there completely yet. So this is a critical area between 104 to 102. Yeah, I know it's big, but this is what the weekly cycle suggests. That means that starting from the current zone, slightly lower, we should expect the dollar yen to start and do some bullish troubles to the bears. We have this special cycle creating here on the daily chart, a bullish divergence developing. We've had one false break. The next false break might be on the alternative trend line, so spiking through, retracing up, and then with the break of the trend line we can start looking for retraces and buy setups, at least for the short term. So this is the zone of, I would say, 104 and lower down to 102. That's where we can expect the retraces down, false breaks, and after we get the reversal on lower time frames, look for pullbacks, breakouts, and you get yourself a wonderful sign for continuation. Euro yen, we get the cycle from daily, the triple cycle. 50% is lying down right here. The 38.2 belongs to the weekly cycle measurement, the double cycle. They provide a magnet zone. If we measure this cycle as an extension, 61.8 would be right here. This is where we are going to, the zone of 127, 126, and I believe this is where we slowly gonna complete the divergence and turn upside again. So meanwhile, on the short term, I remain bearish. Sell rallies was the plan on the last few weeks for us. It is still the same, and I'm looking for that to reach the next important zones. After that, we'll be looking for the buys. Kiwi versus the Canadian. New Zealand and the Canadian. We've been looking for the sales. We finally got them. Portion number one was there. This is a special cycle here or triple cycle. It doesn't really matter how you measure that. The idea is the same. The divergence is in play. Bearish convergence is in play. So as long as this top holds, this is the invalidation. As long as it holds, look to sell rallies. As simple as that. New Zealand CAD on the 4-hour chart, you can see it's possibly creating here a first wave of the special cycle. That was a bearish convergence. This should be possibly stopping on the zone of 0.9260 down to possibly 0.92. It can go and try to clear these lows, and we should get a reversal from here or from here, right? And then further continuation down. EURUSD, which we became bullish on the previous week, as I shared with you on the previous week review, still is there, providing a beautiful rally. There is divergence developing here, and this is a pretty much a monster. This is a bullish channel. This is a bullish channel by itself. This is where it comes critical, the zone of 162. It could be slightly lower, it could be slightly higher, but this is where it's getting critical. So I believe here we should start to see the slowdown and the turnaround. Get ready. So for those of you who are in the buys, it would be a great place to cash out and make some profits. Gold, according to the weekly cycle, suggests higher level, as you can see here, as targets, right? Now it broke this little range, trying to break this little range, which means it could go and continue and rally. The trend line is going up. The channel on the longer view is still bearish. Oh, the daily cycle gave us finally, on the previous week, we were still looking for sell rallies, and we got it beautifully all the way to the triple bottom, and then a bullish divergence that provided us the breakout that we wanted to see. I don't know why it's not full screen here. The breakout we wanted to see. The trend line on the daily was broken. Inner candle, boom. So I would expect a continuation as long as we are above the invalidation area. Note that there is kind of a situation like this here. So we might get a bounces here, but I would still be looking for the buys forward and to the next important levels. The oil, which blocked here the triangle, broke to the upside, going for the next high of the divergence, that should be of around the 70. If we take a look on a daily cycle, it's also building up for us the special cycle by itself. 1, big 2 and 3. This was the little triangle that was broken to the upside, continuing higher, and this should be the destination zone of 70. It could be slightly lower, of course, but this is the critical zone where I believe oil is going up to. As long as this trend line holds, sell rallies is the buy retraces is the plan to the zone of 70, slightly lower, and then we would be looking to sell these rallies. Facebook. This stock was suggested as a couple, maybe a bit more, maybe 3 or 4 weeks ago. We covered that in our weekly review. The idea here was sell, triple cycle to the upside, pretty classical scenario, and the daily cycle by itself. The divergence is a monster here, and that was the place where we got the crush. The recent events from Facebook, of course, contribute to the entire environment. The reason I show it here, so for all those of you who are in sales and contacted me and asked me the questions, where am I going to cash out? This is basically my targets, first one and the second one and the third one. That's the levels where I would be looking for the to take my profits of the Facebook. That's all. And sell rallies, of course, is still plan here. German DAX. We are bears, and we proudly can say that this one paying big time sugar. It's making us well around 800 points from the correction level. It's pretty amazing. Again, this is the first target. The second target, first target is right there, approaching. So make sure you have profits in your pockets. This is the next one, and then the big one would be according to this cycle, but it's pretty much early to discuss about it as for now. So stay bearish, sell rallies was and remains the plan for the long term. Yes, on the short term we might experience pullbacks. NASDAQ finally giving us this, well, I would say the end of a special cycle here. False break and divergence. I love that. I have nothing else to say. I love that. I love the formation it has. I love the false break there. I love the breakout of the last two waves. I love the fact that it starts to create here some short-term lower lows. I believe that this area would be the area of pullbacks, which it would be most likely good and sell after that. So sell rallies is my plan for NASDAQ as well. Ethereum versus the Bitcoin is one of my favorites, as you know. The divergence is still developing there, as you know. We don't have yet a breakout. It's been slowing down here, kind of a wedge. We need to get a breakout. Once we do, this should be a very possible monster to the upside. And my last one for this week is the Ripple, one of my favorites. This is a buy zone. The fact that we had a false break here and it was holding and still holding with the bullish divergence is a good fact for the bulls. If we get one more low, it would be most likely to clean the table for the short-term traders. Currently we have the red trend line for breakout and buys. If we get another low, this would become the trend line, which we will want to see the breakout. And in that case, if we have the low, we should update the trend line, breakout, pullbacks, and possible rallies. Ripple is one of my favorites, and it's not a secret that I'm also on the long-term invests on this one as well. So that's all. This is what we have for the week. Many other setups are on the conditions that are preparing for something big. I am going to cover everything, of course, day by day in the live trading rooms in the Traders Academy Club. If you are not yet a member, I invite you to join us and enjoy from our trading on daily basis. 2 live trading rooms with trading reports and the setups. The link to join is below the video in the description. So that's all. Thank you very much for your time. I hope this is useful for you, that I gave you some ideas where to focus and where to put your attention this week. Previous week was a wonderful week. The pairs we have been following paid beautifully, almost all of them. So I hope this week will be the same. That's the idea, of course. And that's all. Your feedback would be very well welcome. If you want me to cover any instrument that I did not, that just leave your feedback in the comments. Let me know what is the pair you want me to cover, or the instrument, and on what time frame. So I'm not talking about weekly, while you are care about 1 hour chart, right? So that's all, and I will do my best to come back to you as soon as possible. Once again, thank you very much for your time and for your feedback, for your support back watching this video, and I appreciate it very much. I wish you and yours a wonderful week, and happy trading. Yours, Vladimir Ribakov, Traders Academy Club.
Thank you for watching. We appreciate your time. We invite you to join the #1 ranked trading club online, the Traders Academy Club, and to start trading like a real professional. Our students make amazing returns, and you can do too. Let your successful trading journey begin. Join Traders Academy Club using the link below this video now.